Hey guys, today is March 9th, 2020, so I'm just coming with a little update. So last week I was talking about how the market was kind of like up here. It's a little bit off the peak. And today we saw like the markets are collapsing. The Dow Jones, I think it's down like 2,000 points right now at the moment. Oil is collapsing. Things are just like there's chaos in the market, especially with what's happening in the world and the virus and everything. So what I'm trying to say, like I'm just going to give you a little wrap up about why oil is falling. So basically OPEC Plus had a meeting. That means all OPEC nations plus Russia. Russia decided, well, Saudi asked them to do an oil production cut. Russia said no, walked out the room. Saudi retaliated and basically decided to sell their barrel of oil at $10 below market. This happened on Sunday, and basically Sunday afternoon, we saw the price of the barrel of oil drop down like below 30. Right now, it's probably recovering. It's probably like in the 32 range right now as we speak, and basically that caused a lot of panic in the market, bringing down everything else. So what I'm looking at is that today we have some opportunity in this bad time. We're getting a repeat, right, of markets falling. We still have more to go. Like we went from 30 to like I think 25 right now, or 2,400, 24,000. We have a lot more to go. And when we had the 2008 financial crisis, we were up here and we fell like halfway. So we're looking probably around 18,000 on the Dow Jones for some to really probably hit bottom. But I'm not a financial advisor, but I'm just telling you what I'm looking at. So plays that I'm looking at is what I'm really looking for is yield in this market. So I'm looking for like very, very strong companies. So let's just say like Coca-Cola, ExxonMobil, Procter and Gamble, some Canadian banks and stuff. We're looking at what kind of dividends they pay. Look for companies that's been paying dividends for hundreds of years, and who has always been paying dividends. Also, what you're looking at too is that right now when these companies fall, they're probably going to be their dividend is going to go up, like the dividend rate. So you may be able to buy some companies, just say like that has a 10% dividend, and just say that's not typical for these companies. So if you invested some money, just say you get a 10% return on your money. If the stock goes back up, you get some capital gains here and you continuously get the monthly payments, or actually quarterly payments, sorry, right? So this is what I'm looking at. I'm actually looking for yield. You don't want to buy anything that's not going to give you yield. So if you're going to buy a stock just because it fell and it looks nice at its half price, um, just say you do buy that stock and it continues to fall, what are you getting in return from it? You're just going to lose a lot of money. But if we go for yield and just say the stock went here and it drops more, we're still getting paid in our dividends into the future. And if it's a 10% dividend, if it falls more, it might become like a 15% dividend. And you could have gotten more, but so what? At least you're getting paid to take risk now. And you're looking at good companies, which is actually going to pay you a little bit more than they would normally usually do. So, for example, let's just say ExxonMobil. They typically pay a dividend of around 4.5% to 5%. Currently, today, they're at around almost like 9% today in their dividend, right? BP was around a 5% dividend yield one. They are at a 10%. You know, let's look at opportunities. Let's see what's happening, what's crashing. Airline stocks were up here. Now they're like basically half price of where they were 2 weeks ago. So you need to basically just your open up the website, say FinViz, look at all the stocks that they have there, where they were last year compared to where they were now, and start looking. This is not the time to buy, right? And I'm not a financial advisor. This is not the time to buy. This is the time to start to look, because opportunities are going to be opening up, and this is your hindsight 2020 on March 2020 vision. Because if you had all that money in 2008, 2009, and you had all these ideas when you look back, today we are in opportunity zone where it's close to 2008, 2009, and all those who are prepared, 80% of the people, they're not prepared. If you start thinking like, this is where I'm going to find bargains, this is my Black Friday sale, you're going to pick up some good stuff. But I'm going to say, look for yield. On the other part, if you're looking at housing, it's actually probably a good time to make some offers in Alberta. With the crashing oil prices, people are going to panic, and you still have to be careful, because this thing, it spreads to the markets. People's wealth is in markets. If they start to see their wealth crashing, they're gonna be affected in that market too. So a lot of people might not be able to buy because they're probably gonna take out money from their investments to pay as a down payment. So stuff to look at if you're in the market. We're still gonna see some downward action that's been happening for a few years, and with the stock market going down and oil going down, you're just gonna keep on seeing more and more of these descending moves until we actually see a full turnaround. We're looking. I don't know how long. I can't predict these things, but I just know right now we're going down. Anyway, you guys, that's where I'm looking for opportunity. That's where I'm seeing it. I'll probably do another video update again later on in the month or in a week. We'll see how it goes. Peace out. Have a good night.